Hello everyone. Today we're going to be learning about restricted stock units, or RSUs, within your compensation package at ExxonMobil. My name is Kyle McLean and I'm a partner and senior wealth manager with Rame & Gorell Wealth Management. ExxonMobil compensates high-performing employees with various forms of additional compensation above their base salary. Bonus compensation is a common form, but today we want to be talking about RSUs. So what are RSUs? Restricted stock units are a form of ExxonMobil stock compensation awarded to high-level ExxonMobil employees. RSUs are tied to a specific vesting schedule and have various characteristics that open the door for tax planning. This can be a complex topic, so if you or someone you know could benefit from the information or the other services that our firm offers, please reach out for a complimentary consultation with our team, where we take a look at your financial situation to determine opportunities for optimization from an employer benefits, executive compensation, investment, tax, estate, and retirement planning perspective. The most important factor surrounding RSUs is their vesting schedule. When an employee is awarded RSUs by the company, the first 50% of the shares will vest 3 years after the grant date. The other 50% will vest 7 years after the grant date. This is an important factor to pay attention to, because if the employee leaves the company before the shares vest, they will generally forfeit these shares unless negotiated otherwise. If an ExxonMobil employee retires while still having unvested shares, those shares will continue to vest on the predetermined schedule into and through retirement. The taxation of RSUs can be complex, and it's vital to effectively navigate. Before we dive into this, it's important to understand some of the terms that relate to this form of compensation. The grant date is when the restricted shares are awarded to the employee. This is the first event that takes place regarding RSUs. The vest date is when the shares become unrestricted and are delivered to the employee. As stated earlier, the vest date for half of the shares is 3 years after the grant date, and the vest date for the other half is 7 years after the grant date. The cost basis, in simple terms, is the original value of an asset for tax purposes. When considering RSUs, this is determined by the valuation of the ExxonMobil stock on the vest date. Now that we're aware of the important terms regarding RSUs, let's take a look at how these RSUs are taxed. When an ExxonMobil employee is awarded RSUs, no taxes are due at the grant date. However, the first taxable event that takes place is the vesting date. The employee will have to include the fair market value of the vested shares in their income for the year in which they vest. This is now the employee's cost basis. Exxon automatically sells a portion of these shares in order to make an estimated tax payment on the employee's behalf. For employees with less than $1 million in total income, they sell 22% of the shares for withholding purposes. For employees over $1 million in income, they sell 37% of the shares. If your tax rate is greater than 22%, you should make an estimated tax payment during the course of the year in order to avoid an unexpected tax bill come filing season. Many employees choose to simply sell the stock in order to diversify as soon as it vests. For those that decide to hold the stock, it's important to note that any growth in the value of the shares sold during the first 365 days after vest will be subject to short-term capital gains tax rates rather than preferential long-term capital gains tax rates if shares are sold after a period of 1 year. Oftentimes, our clients utilize the cash flow from RSU income to facilitate other beneficial tax strategies, such as the Mega Backdoor Roth within the savings plan or the Backdoor Roth IRA outside of Voya. If you would like to discuss some of the strategies that Rame & Gorell Wealth Management assists many of your colleagues in executing with cash from RSU liquidation, we encourage you to contact our team. Thanks again for spending some time with us today to learn about restricted stock unit compensation at ExxonMobil. At Rame & Gorell Wealth Management, we provide advice on over $1 billion in client portfolios. And as a firm, we strive to serve as an effective one-stop shop for comprehensive retirement planning. The many CFP and CPA tax professionals on our staff specialize in helping our clients take advantage of advanced financial strategies to materially enhance their financial ability to enjoy their lives, both before and after retirement. We invite you to schedule a complimentary consultation with our team by giving us a call, sending us an email, or visiting our website today.